Hi everybody, this is Dr. Sudipto Ghosh. Welcome you to Knowledge School. Today we are going to learn about the strategies for optimizing returns using systematic investment plans. Hope you will watch this video and subscribe the channel. Under systematic investment plans, an investor does not have any control over the investments made or timing thereof. However, much better returns can be generated by using the strategies. Say, we are going to discuss the strategy 1. Do not start a systematic investment plan for the whole amount of what you can save every month. Start a SIP in the chosen equity scheme for the minimum amount, say 500 rupees per month. Keep the remaining funds in your savings account. Invest the extra amount in lump sum, and when NAV looks attractive due to the markets having fallen, Strategy 2. Act as suggested in Strategy 1, but invest the remaining amount as SIP in a liquid fund, where returns are better than savings account. When markets fall below a particular level, switch the funds accumulated in liquid fund to the equity scheme. Use this strategy on every fall to augment your investments in the equity scheme. This strategy gives better results. Strategy 3. Start a SIP for the desired amount in a date-based or liquid fund scheme. Whenever there is a fall in the market index, switch an appropriate amount from the liquid or debt scheme to the desired equity scheme. Strategy 4. If you anticipate the markets to fall, switch a major chunk of your accumulated units, say 90%, to a liquid fund. When NAV falls significantly due to the falling market, switch back. You will get the double benefit of interest for the period when the market was declining and an increased number of units in your folio. However, this strategy should be used on the basis of sound information and not rumors or tips. Now let us discuss about systematic transfer plans. If an investor has a big lump sum amount to invest in an equity fund, it would be better to use STP. Under STP, the lump sum is parked in a liquid fund and switches are made from it to the equity scheme for the specified amount on a daily, weekly, fortnightly, or monthly basis till the whole amount is switched. Systematic withdrawal plans. Systematic withdrawal plans are just the reverse of SIPs. Under systematic withdrawal plan, you can withdraw a fixed amount every month or for any other periodicity by giving standing orders to the fund house. On specified dates, the fund house will redeem an appropriate number of units and credit the proceeds to the linked bank account. The remaining units, after redeeming each installment, continue to enjoy benefits such as dividend, capital appreciation, etc. Units can be withdrawn or redeemed even over and above the SWP installments in case more funds are needed. Systematic withdrawal plans are ideal for retired persons in need of regular income who have an accumulated corpus of mutual fund units. Switching facilities. Switch facility enables the investors to move their investments from one option to another within the same scheme or various schemes of the same fund house. Thus, an investor can opt to switch from dividend option to growth and vice versa. Similarly, he can also switch from scheme A to scheme B or C. Units switched from a scheme are repurchased by the fund house at applicable NAV, and units switched to a scheme are issued at applicable NAV. Let us know about the options under a mutual fund scheme. Mutual fund schemes offer three options, out of which an investor has to choose one. These are the growth option. Growth option is for investors who seek capital appreciation in their investments. Also called growth plans. Such schemes do not declare dividends, and the income from investments are redeployed in the scheme. Growth option units have a higher NAV than dividend option. Dividend option. Dividend option is for investors who desire regular dividend income from their investments. Under this option, dividends are periodically distributed to investors as and when there is sufficient distributable surplus. Reinvestment option allows an investor to have the dividend reinvested by issuing units in lieu of dividend. Such additional units are issued at NAV applicable at the time of declaration of dividend. The number of units to the credit of the investors increased accordingly. Hope you have gone through the video and able to understand the different aspects and the strategies of investing in mutual funds. In our next video, we will discuss how to select a good mutual fund scheme, when to exit from a mutual fund investment fallacies, and precautions in mutual fund investment. Thank you.